I'm wondering if you can be a bit more specific about any risks that you see related to a double-dip recession or signs that the recovery was stalling or maybe begin to stalling compared to some of the signs that we were seeing earlier in the summer. Thanks very much.
Yeah, so maybe I'll talk more broadly about the outlook and include your question in it. So as I mentioned, economic activity and employment picked up beginning in May and right through June and remain well below their levels because I'd say job gains have reversed about a third of the job losses from March and April, and consumer spending has reversed about a half of the drop. So, but nonetheless, those were sooner and stronger than we expected. So, but what happened then was, along with that positive data, we got the virus increases starting in the middle of June in lots and lots of states around the country, and that brings us to a new point here, which is we need to, in addition to dealing with the health crisis, we have to remember this is really a health crisis, and these are people who are having the coronavirus, and it's taking a terrible toll. So we've got to deal with the economic ramifications of that. So what we're seeing is that we monitor quite a lot of what we think of as sort of non-standard high-frequency data. That's become a very important thing, even more important than usual in the work that we do. And what that data show on balance is that the pace of the recovery looks like it has slowed since the cases began that spike in June. So some measures of consumer spending based on credit card and debit card data have moved down. Recent labor market indicators point to a slowing in job growth, particularly among smaller businesses. Hotel occupancy rates have flattened out. People aren't going out to restaurants, bars, gas stations, pharmacies, and beauty salons as much. Consumer surveys, by the way, which had dropped very sharply when the pandemic arrived and then moved back up sharply, they look like they may be softening again now. There's still some areas of strength. Housing and motor vehicle sales have still been strong. Nonetheless, on balance, it looks like the data are pointing to a slowing in the pace of the recovery. But I want to stress, it's too early to say both how large that is and how sustained it will be. We just don't know yet because we have to wait to see the actual data on spending and employment come in. But this is what we're seeing, and of course we're monitoring it very carefully. And I'd be remiss in not stressing this enough. The path of the economy is going to depend to a very high extent on the course of the virus and on the measures that we take to keep it in check. That is just a very fundamental fact about our economy right now. The two things are not in conflict. Social distancing measures and fast reopening of the economy, they actually go together. They're not in competition with each other. So.
Thank you. Chris Rugaber.
Hi. Well, just to follow up on that a bit, and thanks for taking my question. You added the sentence into the statement about the course of the economy depends on the path of the virus. Do you feel this idea or this view is not widely enough understood? Do you feel you had warned back in May that too early reopening or an incautious reopening might harm the economy? Do you feel that message was not heard and that some of these reopenings took place perhaps sooner than they should have?
I think we feel that it might be the most central fact or the most central driver of the path of the economy right now is the virus. And you're seeing that again now. You saw that during the lockdown. When we got cases way down, you saw the economy reopening, and you saw spending go up and hiring go up. And now that the cases have spiked again, the early data, the high-frequency data, suggest that there's a slower pace of growth, at least for now. We don't know how deep or how long that will be. So it's such an important sentence. We just decided that it needed to be in our post-meeting statement. It's so fundamental, and I think we can't say it enough. It's really important. You can think of it as three stages. There's the lockdown, and we know what that looks like, and we'll get the data, I guess, later this week on GDP being down very, historically large amounts. Then there was the reopening, and we would expect that many people would go back to work. Those whose jobs could be done without exposure to lots of people in tight groups, they should be able to go back to work during that phase fairly quickly. But that would depend on being able to keep the virus under control, which will depend on wearing masks and other social distancing measures. So that's where we are. It's such an important factor. We're all talking about it, so we thought it really had to be in the statement.